Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and we are now towards the fag end of the result season. It has been quite a strong sort of earnings quarter from the perspective of September quarter. Today, we are going to be doing a result conversation, a result review for a company which is not a stranger to our show. It's UFlex Limited, and let me now welcome the management, Mr. Rajesh Bhatia, the Group President, Finance and Accounts, and the CFO of the company. Rajeshji,
Thank you.
once again, welcome to the show.
Thank you. Thank you, Piyush.
Um, the quarter has been good. So I think if we take a look at the revenue numbers, again, basically a good stable sort of performance. We have seen net profit again that has shown quite a good jump sequentially. Uh, in fact, we have seen almost 63 crores of profit. If we take a look at consolidated numbers versus a sort of slight loss last time. But even if you take a look at the last year, we are looking at slightly lower profit numbers, but on our revenue numbers, perhaps a mild dip. So perhaps let's start from here and let's try and understand while we've improved sequentially, how's the sort of overall business environment looking to versus last year?
So I think we'll have to go segment by segment. So if we talk about the best performing this quarter and this year, it's been flexible packaging and aseptic packaging. So both have shown good traction. Flexible packaging this quarter, on a quarter-on-quarter basis, the volumes have jumped by 21%, which is very, very significant.
Okay.
Even on a year-on-year basis, we are up 7% in the flexible packaging business. Both laminates, holographic, so whatever the subsets of that business. So, we show seeing the huge volume traction
Mm-hmm.
over there. And the aseptic packaging business, this quarter was impacted because of the regular seasonality. So we are not, while we may be down on a quarter-on-quarter basis, but on a year-and-year basis, we marginally up. So that business has also performed very well in terms of the volumes up to the expected levels. And the third and the largest business for us, which is the flexible packaging films business, that is
Mm-hmm.
where market by market we have to. So if I look at India market, first of all, we continue to be plagued by the overcapacity issues in the BOPP and PET business, which is driving the volume the margins down. Good part is volumes for us haven't dipped, and in fact, on a Q and Q basis, YOY, of course, will be larger because we commissioned the Dharwad facility from starting this fiscal. But even on a quarter-on-quarter basis, we've been able to maintain the volumes there. If we now come to the two largest other markets, which is the America, this quarter on a quarter basis, we've grown double digit in terms of
Mm-hmm.
volumes. But in terms of the in the European markets, we pretty much flat as compared to the Q1. So that market still continue to get impacted by the lower demand, given that you have people shifting their purchasing power to pay for their energy and higher EMI costs. So that market, the volumes are still taking times to get back to the normal levels. Overall, if I tell you this quarter versus last quarter, we had more than 11% production volume growth in
Okay.
in our pack films in our packaging films business. Uh, on a sales side, because there's a lot of stuff that we consume internally to convert this into packaging, and given the packaging business had a 21% volume increase, so which means that you're using more of your own production into the packaging products. So on a sales side for us, we are still close to about 7% higher on a quarter to quarter basis for the packaging film. So the volumes have been good. The margins have been better. You see our EBITDA has improved by almost a third on a sequential quarter basis. We today for this quarter, our EBITDA margin was about 12%, 9.3% last quarter. Overall, we should, if we do for the year, so H1, if I see, we are at about 10.6%. Overall, for the year, if we can achieve about 11.5% or so, I think that would be quite ideal for us.
Absolutely. So, can I say that on a blended basis, overall basis, the volume growth was a double digit on an average basis across all divisions, like if we combine?
Mm, I don't really think so because if you talk, are you talking about quarter or the H1 numbers?
No, no, no. Quarter. September quarter versus the last year.
So September quarter versus this year, if we talk about the production basis,
Hmm.
our total production volume grew 7.1% on a quarter-on-quarter basis.
Right. So on a
For
quarter on quarter basis.
quarter-on-quarter basis. And
Okay.
the sales volume was up 5.4% on a quarter-on-quarter basis.
Okay. Okay. 5% quarter on quarter basis. Uh, and does that imply that the pricing basically still remains on a lower levels? Because if I look at the revenue numbers, it is telling me that the pricing is the one actually which has not worked in favor for you, or maybe
So the
the
so
market.
the pricing is revenue is down on a quarter-on-quarter, year-on-year basis. It is down by about close to about 11.9%.
Hmm.
On a quarter-on-quarter basis, it's up about 3.5%. But if we talk of H1 on a revenue basis, we are down by about 15.5%. So
Yes.
it's not only the volumes, it's also, the raw material pricing has also corrected, and the margins are also lower in the packaging films business. So it's a combined net impact of that, which is culminated into about a 15.5% drop in the revenues for H1.
So the message which I want to actually take out for our viewers from here is that last year was a very exceptional year. We saw a lot of volatility, war. Due to that, prices went up because of energy prices. Petrochemical prices went up. Obviously, the cost went up, and then we started seeing a cycle of correction as we went to December quarter, then the March quarter. So moderation started happening. So on a cycle of 3 to 4 years, as per your experience, the where are the prices right now at present for you?
I think the prices are reflected in your overall margin. If you see last year, FY23, the average blended margin was about 17%.
Mm-hmm.
FY22 was about 21%. So overall, the pandemic years have been pretty good. The demand was pretty strong.
Mm-hmm.
Then you had those wars. Then you had the overcapacity building up in the packaging film segment, which has eroded your margins as well as when you say Europe is down in terms of a consumption or Americas is down in terms of consumption. I think that itself explains that where will you get the pricing power from?
Mm.
India pricing power, the volumes are pretty strong in India. It's the pricing power in India which is being taken by the overcapacity that has got created. I
Right.
think that will get addressed in another 1 or 2 quarters for sure. But America market, as I said, on a quarter-on-quarter basis, we are at least 10% plus, which is a good indicator of the things improving.
Mm-hmm.
But Europe still remains a matter of concern for us.
Right. And how is sort of overseas operation from the perspective of Egypt facility is doing? Last time we talked about where you said that due to currency you had to make some adjustments. So how's that part of the business doing?
So Egypt, two territories at least, Nigeria and Egypt, we continue to have headwinds in terms of the dollar parity, exchange rate parity, as well as the availability of the dollars in those markets. So,
Hmm.
while Egypt has not devalued officially, but when we talk about the non-availability of the dollars over there and all that, and we hear about the market premiums, it's clearly reflecting that the demand supply mismatch is resulting in the market rates being different from what the official exchange rates are. Nigeria also suffers from a similar set. Nigeria had last quarter devalued its currency significantly, because of which we had to take about close to about 400 crores of a loss in the quarter itself. And there also the situation continues to remain, quite volatile in terms of the demand supply mismatch. But somehow, being a substantial player, being a large player, and having international presence, we are able to, sort of mm, take care of, this volatility, get the dollars, because from Nigeria we have possibilities to export as the US markets have come back and likely to perform better in the next 2 quarters. So you have export potential over there. In Egypt also, you are able to source the currency from the banks at the prices. But there the advantage has been because the other customers, your customers, are not able to source the currency from the banks, smaller ones. So you have that pricing power that comes into play, being a local player. You are selling in Egyptian pound. Somebody importing earlier from the overseas markets, if they have to settle their payments in dollars, so they are preferring not importing, because they know that they can't get dollars from the bank. If they go to the parallel market to get the dollars, they're obviously paying for higher. So there has been a demand uptick in terms of the import substitution in some of these markets. Also, Nigeria has imposed from 1st of September, I think, a 30% additional import duty on import of the PET films into the country. So
Okay.
obviously that helps us to, sort of improve our pricing, because the imports have become now dearer over there, and this, as the local manufacturer, we get that advantage.
And that will also actually help your margins. That perhaps will give some relief.
Absolutely, absolutely, that helps your margins.
Right, sir. And broadly, how's the client commentary looking like? What are you hearing uh, from the overseas clients?
So I think, especially Europe, there's no clear guidance emerging, and but America, because the numbers are already showing up, so there we are quite upbeat that Q4 is going to be a major turning point in terms of the demand and the pricing power coming back. Uh, so that's the two large markets. India, I already told you that we've not seen any demand contraction. It is, I
Hmm.
would tend to believe that India market is still growing at more than a double-digit growth in terms of the packaging films volumes, and that's a pretty healthy sign. So that will take care of the demand-supply mismatch in a much shorter tenor than everybody else is expecting.
Sure. And from the cost driver point of view, we have seen a bit of 10% jump in the power and fuel expense. Is that perhaps due to ramping up of new facilities? Like I'm
Yes.
talking about YOY difference. Is that largely due to the new facilities, right?
Yeah, that's due to the new facility what we commissioned in Dharwad, PET facility, and the CPP and the CPP facility in Dubai. So that's the reason. Also, I think we going to, from next calendar, we going to have a substantial lower power cost in our European operations, because now the power prices for the next year are much lower as to what we are paying in this calendar, because we had official contract for the calendar 2023. So we expect that the power savings are going to be substantial in the European markets as well.
Okay, and a word also on the tax savings, sir. This time we have seen there has been a tax credit, I would say. Is it primarily because of the loss made in the last quarter or due to any subsidiary? Like, what is the reason for the tax credit?
I think that's because of the overall losses which have come for the year as for the H1, and but on the tech side, a real position will come only by the end of the year when you are you finalize that liability. But I think we'll have to leave the tax discussion to towards the end of the year.
Towards the last quarter.
Yeah.
Fair enough. And any other plans, sir, from the perspective of any need to raise funds or any plans of any acquisitions? How's it looking like? What's the strategy for the second half?
I think the first right now it is getting back the things to normal in the packaging films business, which is if you see that is the business which contributes about 60% of our revenue, and the 40% is comes from flexible packaging, aseptic packaging, and other substrates. So consolidating that business, ensuring that you are you achieve again the volumes. So at a point in time, our Europe facility was operating at more than 100% capacity. Today, last quarter, it has done about 60% capacity utilization. So I think the first target is to achieve get your volumes back from some of these markets, because unless you've sold yourself fully, there's no point talking any further expansion
Yeah.
in these times. And I don't think so there are any plans to do any acquisition as of now. And the aseptic packaging business, we are likely to commission later in FY25, capacity ramp up from 7 to 12 billion packs. So that should come handy in terms of giving us an additional top line as well as the profitability, because that's the business where the volume growth is likely to be there, given that the markets that are growing at about 20% growth, not only in India, but the export markets have done also pretty well for us part of in that business. So overall, our business, many businesses, business is impacted by the demand supply and also the demand in Europe, and the 40% business is roaring, and that's what differentiates you from only the packaging films plays or the packaging plays. So that basket is helping us today.
Right. And a word also on the working capital trends. How's that shaping up? Or how that shaped up in the September quarter, and what are the early trends for December
So
quarter?
there are no surprises over there in terms of the working capital bit. So I think we are not looking at extending more credit to improve the volumes, because we know that that's not going to help that cause. So we pretty stable in terms of both creditor levels as well as the receivables and the stocks level. I think they're pretty normal.
Perhaps my last question, and that would be recently there has been a lot of trend from the perspective of sustainable packaging. We have heard from quite a marquee brands where they have been actually trying to make some shift there. What is UFlex trying to do in that area?
I think UFlex is the global leader in that arena, but unfortunately, I think there is more of a lip talk as of now, rather than the actual numbers converging. We've set up facilities in Mexico where we are able to produce you know, take the old PET bottles and convert that into the PET chips resins for the packaging BOPET films business. We doing that in India, but the volumes are little still less.
Mm,
And I think while they have improved in the last 6 months or so, but still it's taking more time than what it is. Regulatorily, India has moved on, and they're promoting both recycling as well as the biodegradable films. But as it gets implemented, as the the monitoring becomes tougher and all that, I think that's where people would love to pay extra for some of these products, I think, as of now. And today, given the margins of the FMCG companies this quarter at least, I think there is now a headroom to pay for extra bit of for the sustainable packaging, and hope that happens. So I think UFlex has done uh, extremely well in terms of product availability, technology, both biodegradable and the recycling biz. As I've ever always said, that recycling is just an enabler as a show cause to say that
mm,
packaging, flexible packaging is not a bad thing, and you need to put laws in place to ensure that it is recycled. But our biggest gains is where we are banking upon is the biodegradable products, which takes away any liability from the existing brand owners to either recycle or to collect their waste, or to comply with any other ways with the EPR. So if you're making a biodegradable product, that itself is good enough for you to be compliant with the new EPR guidelines. Next 5 years for that is going to be pretty exciting, and if that happens in a correct perspective, I think the global markets will also catch up on that, and we'll see a different UFlex for sure.
Well, on that exciting note and on that good note, futuristic note, perhaps we would like to wish you all the well, all the best wishes to you for the December quarter and the second half. And we'll stay in touch and again talk to you as we move towards the next quarter. But for now, thanks a lot, sir, for coming on the show and
Thanks
giving us
for
insights on the
having
operational performance.
me. Thank you. Thanks a lot. Bye.
And dear viewers, that was about UFlex. Hope you enjoyed the show. For now, it's a wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.